Relative strength index and simple moving average trading signals occur when there is a crossover among stock close prices and their simple moving average, which is confirmed by relative strength index being at an overbought or oversold area. Therefore, we have price crossover and bands crossover confirmation type of trading signals, in which a stock is considered overbought if the relative strength index is above plus 70, and the stock is considered oversold if the relative strength index is below plus 30. Therefore, we have a buy signal if the previous close price was less than the simple moving average, and then the current close price is greater than the simple moving average, and this is confirmed by the relative strength index being below 30. On the other hand, we have a sell signal if the previous close price was above the simple moving average and the current close price is below the simple moving average, and this is confirmed by the relative strength index being above 70. Stochastic oscillator and simple moving average trading signals occur when there is a crossover among stock close prices and their simple moving average, which is confirmed by slow stochastic oscillator indicator being at an overbought or oversold area. Therefore, we have price crossover and bands crossover confirmation type of trading signals, in which stock is considered overbought if our slow stochastic oscillator is above 80, and the stock is considered oversold if the slow stochastic oscillator is below 20. Therefore, we have a buy signal if the previous close was less than the simple moving average, and then the current close is greater than the simple moving average, and this is confirmed by the slow stochastic oscillator being below 20. On the other hand, we have a sell signal if the previous close price was greater than the simple moving average and the current close price is less than the simple moving average, and this is confirmed by the slow stochastic oscillator being above 80. Williams percentage R and simple moving average trading signals occur when there is a crossover among stock close prices and their simple moving average, which is confirmed by Williams percentage R indicator being at an overbought or oversold area. Therefore, we have price crossover and bands crossover confirmation type of trading signals, in which a stock is considered overbought if our Williams percentage R is greater than minus 20, and the stock is considered oversold if Williams percentage R is below minus 80. Therefore, we have a buy signal if the previous close price was less than the simple moving average, and then the current close price is greater than the simple moving average, and this is confirmed by Williams percentage R being below minus 80. On the other hand, we have a sell signal if the previous close price was greater than the simple moving average and the current close price is less than the simple moving average, and this is confirmed by Williams percentage R being above minus 20. Great, so let's go back into our Python PyCharm IDE so that we can study simple moving average with relative strength index, stochastic oscillator, and Williams percentage R trading signals with greater detail. Excellent, so here we are back within our Python PyCharm IDE. In this lecture, we'll be working within our SMA and RSI, SMA and STO, and SMA and percentage R code files. If you have any questions about their setup, please go back to section 1, Stock Technical Analysis Data Lecture, where all of that explained with greater detail. So let's begin with SMA and RSI, or Relative Strength Index. As all of these are meant to be standalone type of files, first we import our packages, then we proceed to do our data reading. Next, we calculate our technical indicators with a corresponding chart. We're calculating a 5-day simple moving average and a 14-day relative strength index. These are commonly used, but you can also modify them according to your needs. Next step is to calculate our price and bands crossover type of trading signals. For this, we have to calculate previous periods data to avoid the backtesting bias. The reason for this is that we'll be implementing our trading signals 1 day later than observed. Therefore, we create previous periods close, simple moving average, and relative strength index data. Also, second previous period, close, and simple moving average. The reason we are not creating our second previous period's relative strength index is that it's only used for confirmation. The way of creating them is going into our original data frame and shifting our data 1 or 2 positions. Then we generate our trading signals. Buy equals 1, sell minus 1, do nothing equals 0. For this, we create the corresponding column where we're going to store them, which is RSI, SMA, SIG, and initially it's going to be all of it 0, which is do nothing, but we'll modify it. For this, we create a variable with its same name, initialized at 0, which we're going to use within our for loop. for I, R in enumerate SPY iter rows. So it's going to go through all the rows within our data frame, and it's going to ask the following. If our second previous close price was less than the second previous simple moving average and previous period's close price was greater than previous period's simple moving average, and this is confirmed by our previous period's relative strength index being below 30, then our signal turns to 1, which is a buy signal. If this is not the case, we enter a second if, which is a nested if within the original, or elif, in which we ask if our second previous period's close price was greater than the second previous period's simple moving average and previous period's close price was less than previous period's simple moving average, and this is confirmed by our previous period's relative strength index being above 70, then we have a signal equals to -1 or a sell signal. If none of these two conditions is met, then we have 0, which is do nothing. In all those steps within the loop and the I counter, we are updating our original data frame SPY at I log, which is I row, 13th column where we just created above with the corresponding signals we are obtaining within our for loop. Next step is we are going to do our trading signals chart, fig2, AX for axis equals plt.subplots, 3 of them which share x-axis as true. In the first of them at position 0, we're going to plot our close prices together with the technical indicator, which is simple moving average, and the legend located at the upper left. On the first position, which is the second of the charts, we're going to do the plot of our relative strength index oscillator, colored in green, and we're adding 2 horizontal lines, one at 30 and the other at 70. Both of them are dashed through their line style and colored in red for the corresponding thresholds of these indicators. Again, these are the commonly used thresholds, but you can also modify them according to your needs. Then we locate the legend at the upper left. And then we have the last chart, which is at position 2, and we're going to plot those signals. The marker is O or dots, line style blank, so there's no lines connecting the dots. The legend is located at the upper left. We add a superior titles to all these subplots: SPY close prices, simple moving average SMA 5, and relative strength index RSI 14 days, and we show the chart. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into run SMA and RSI. Excellent. So first we'll see a chart in which we have our corresponding prices with their corresponding technical indicator right over here and below our corresponding oscillator. So let's close this chart and focus on the one we just created. We're going to make it a full screen, which needs to be done manually because of the screencast. Excellent. All the way to the right, also all the way into the bottom. There we are. So here we have our chart, SPY close prices, simple moving average SMA 5, and relative strength index RSI 14 days. On the top chart we have our close prices in blue. In orange we have our simple moving average. Below we have our relative strength index oscillator in green and the corresponding thresholds in red dotted lines. At the bottom we have our signals. As we can notice here, we only have zeros, which is do nothing. We don't have either ones, which is buy, or -1, which is sell. The reason for this is that the corresponding price crossovers that we observed in this close and simple moving average trading signals are not confirmed by the oscillator. We can see that the 3 charts, they share the horizontal axis of dates from the beginning of 2016 to the beginning of 2017. So let's close this chart here, and also this one and the last one. We'll study all later on with greater detail. So let's continue to our next multiple indicator based trading signals, the ones from SMA and STO. Again, they have similar mechanics as they are meant to be standalone type of files. We import our packages, we read our data, next we calculate our technical indicators, simple moving average for 5 days, and then our corresponding stochastic oscillator for slow K and slow D. Slow K is the first smoothing of 3 days and slow D is the second smoothing. Therefore, we have as parameters for the corresponding technical indicator the fast K period 14 days, the first smoothing of slow K 3 days with its MA type of 0 or simple moving average. Then we have the slow D period, which is also 3 days, and its corresponding moving average type, which is 0 or a simple moving average. We're going to focus on this one for our corresponding trading signals. Again, these are the commonly used parameters, but you can also modify them according to your needs. Next, we have our corresponding price and bands crossover trading signals. We have previous periods data to avoid backtesting bias. Then we generate trading signals, buy 1, sell -1, do nothing in their corresponding column and the variable we're using within the for loop. This for loop, we're asking if our second previous period close price was less than that second previous period's simple moving average, and then previous period's close price was greater than previous period's simple moving average, and this is confirmed by previous period's slow D stochastic oscillator being below 20. that's the case, we have 1, which is a buy signal. If not, we have the second conditional, or elif nested if, in which we ask if our second previous period close price was greater than second previous period simple moving average, and previous period's close price was less than previous period simple moving average, and this is confirmed by our slow D or slow stochastic oscillator of previous periods being above 80. Then we have -1, which is that sell signal, and if not, we have 0, and we update the corresponding data frame. Excellent. So we're also going to do our chart. It's 3 subplots. First one with close and the corresponding simple moving average. Then we have the second one, which is our oscillator, slow K colored in red in line style dash, and then slow D colored in green. We also have the horizontal lines with the thresholds 20, 80 dashed, both of them, and colored in orange. Again, these are the ones used commonly, but you can modify them according to your needs. Then we have the corresponding strategy signals with marker O or dotted type, lines in blank, so there's no lines connecting the dots. And then we have the title of the chart, SPY close prices, simple moving average SMA 5, and stochastic oscillator, full stochastic, 14 days for its calculation, 3 for the first moving, 3 for the second smoothing. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into run SMA and STO code file. So first we have the chart in which we have our close prices together with the simple moving average in orange, and then we have the oscillator below. So let's close this one, and we're going to focus on the one we just created in our code. So let's make it a full screen manually because of the screencast. Excellent, all the way into the right, also all the way into the bottom. So here we have our chart of SPY close prices, simple moving average SMA 5, and stochastic oscillator, full stochastic, 14 periods, 3 for the first and 3 for the second smoothing. Top chart, our close prices in blue, our simple moving average in orange. Then the middle chart is going to be our 2 oscillators, slow K, dotted red line, then slow D, the solid green line, and then as dotted orange lines, our corresponding thresholds. At the bottom, we have the strategy signals. 1 is buy, 0 do nothing, -1 sell. The 3 of these charts share the horizontal axis of dates from the beginning of 2016 to the beginning of 2017. So let's focus on some of the signals. Let's say that we choose this specific part right here of the code where we have at least 2 of them. Excellent. So as we might remember, first of all, we need to observe the signals generated by the price crossover of our corresponding close prices and the technical indicator of simple moving average. So if the close prices went from above to below the simple moving average, and this was confirmed by the slow D stochastic oscillator being above that upper threshold of 80, meaning that it was overbought, then we had a sell type of signal. On the other hand, if our close prices crossed from below to above the simple moving average, such as in this case, and this was confirmed by our slow D stochastic oscillator being below 20, which was the oversold area, then we have a buy signal like this one right over here. As always, if you focus on the left hand corner at the bottom and you use your mouse cursor, you can see the precise values of the chart. Then this is a way of zooming out, and we close the corresponding chart. We also close this one and the last one as well. So let's go into our last multiple indicator based trading signals, the ones generated by SMA and %R, which is Williams %R. Again, they are meant to be standalone type of files, so we first import our packages, then we do our corresponding data reading. Next, we calculate our technical indicators, 5-day simple moving average and 14 days Williams %R. Again, commonly used parameters, but can be modified according to your needs. Then we have the corresponding price and bands crossover trading signals, first with previous periods data calculation to avoid backtesting bias. Then we generate trading signals, buy equals 1, sell -1, do nothing 0 in the corresponding column, and the variable we are updating in the for loop. So when we're asking the first if our second previous close price was less than the second previous simple moving average, and then our previous period's close price was greater than previous period's simple moving average, and this is confirmed by previous periods Williams %R being below -80, we have 1 or a buy signal. If it is not the case, we enter that nested if, in which we ask if our second previous period's close price was greater than the second previous period's simple moving average, and our previous period's close price was less than previous period's simple moving average, and this was confirmed by previous periods Williams %R being above -20, then we have -1, which is a sell signal. If this is not the case of either of them, we have 0, which is do nothing, and we update our corresponding column. Then we create our chart here, which is three of them, three subplots. The first one at position 0, close prices and simple moving average. The second one at position 1, we have Williams percentage R colored in green, and the two horizontal lines at -20 and -80, line style dash and red, so they are the corresponding thresholds which can also be modified according to your needs. And finally, we have the last subplot at position 2 with our corresponding signal with the marker of O, or dotted type of marker, line style blank, so there's no lines connecting the dots. And we have the corresponding title of this chart, which is SPY close prices, simple moving average SMA 5, and Williams percentage R 14 days. So let's proceed to run the code by clicking the right button on the mouse and scrolling down into run SMA and percentage R code file. Excellent. So here we have first our chart with our close price and simple moving average, and below we have the oscillator or Williams percentage R. So we're just going to close this one, and we're going to focus on the second chart by making it full screen manually because of the screencast. There we are, all the way to the bottom. So here we have SPY close prices, simple moving average SMA 5, and Williams percentage R for 14 days. At the top we have our close prices with their simple moving average as that orange line. Below we have our oscillator, Williams percentage R, and corresponding thresholds as red dotted horizontal lines. And at the bottom we have our strategy signals. Notice we only have 0, which is do nothing, -1, which is sell. We don't have any ones, which are buy signals in this strategy. They share the horizontal axis of dates from the beginning of 2016 to the beginning of 2017. So let's focus on any of the sell signals just to see how they correspondingly work, like this one, for example, in which we first focus on how our close prices go from above to below the corresponding technical indicator, which is the simple moving average, and this needs to be confirmed by our Williams percentage R being above the upper threshold, which is -20. The lower one is -80. So if it is above -20, then it is considered overbought. Therefore, we have a sell signal. We would need to have a place where our close price cross from below to above, and this would need to be confirmed by our technical indicator oscillator being below -80 or in a oversold area. Therefore, we would have a buy signal, which is not the case in this example. Excellent. As always, you can focus on the left hand bottom corner and use your mouse to see precise values and zoom out by scrolling back. Excellent. So with this, we finish our corresponding trading signals. We've already studied them for single indicators, both lagging and leading indicators, and now we study the multiple ones in which we combine the simple moving average and its confirmation through some form of oscillator or leading type of indicator. So now it's time to continue with our following section. Now that we studied trading signals, we need to see how these trading signals generate their corresponding trading strategies, and that is going to be our following objective.